Hello traders, welcome to the weekly Algo Setups volume 293. You know what we're going to be doing, having a look at the markets, how they developed this week, what setups we had, and most importantly, what we can expect for the upcoming week. You know how I do it right now. I reverse engineered the market, having a look first at my previous outlook, and then of course I provide you with an updated one. So without further ado, let's get into it. Well, checking out the economic calendar, it seems like a pretty slow week. So Monday, no news. Tuesday, we have Aussie rate statement here. So for the Aussie traders, definitely watch out for that. Wednesday, NZD rates, and then we have this meeting minutes, which is usually not that volatile because they're just releasing the minutes. But sometimes it does bring in some volume, but it's also pretty late for trading. Thursday is kind of the only day where we have a proper USD news release, so unemployment claims. And then on Friday, some GDP, and some CAD news. So CAD news here, CAD news there. Nothing for the US dollar apart from Thursday. So this makes me think, okay, are we going to move this week? But again, we never know. So there is nothing to be worried about this week. I guess you can just show up, trade the setups that you're seeing. And usually these weeks tend to be all right, because when the market is not expecting like a Fed rate or NFP or CPI or a Powell speaking, then the market just tends to go its way without that anticipation and it just moves. So again, nothing to worry about this week. Let's have a look at the technicals. Before we get started, make sure to join my free school community. It's an absolutely incredible, positive community with a lot of value from everybody. And the classroom here is a full course that I've never shared anywhere. So make sure to join. It's the first link in the description. All right, as always, we're gonna get started with the DXY. So let's very quickly pretty much reverse engineer it to go to my overall forecasts for last week. Now here again, I had a couple of scenarios, like it really depended on what the market wanted to do, but I really wanted to see these daily bearish imbalances to get retested so I can short from there. What the market did, it opened, it took liquidity, it tried to pull back into these, but then here we just flushed. We just flushed on Monday and we closed below the liquidity. So there were some shorts right there. And then pretty much since then we stopped and we started giving a little bit of a pullback, and then we tried to push lower but we failed. And then on NFP here on Thursday NFP we popped higher, and then there was the bank holiday. Honestly, a pretty boring week, I would say. Monday just flushed and then we had all that consolidation. There was a newly created bearish imbalance here that kind of gave us a little bit of a clue that, hey, maybe the market wants to go lower, but it just failed to follow through. It came into it with a lot of bullishness here from the quality time frame as well. There was that battle between supply and demand, and at the end, pretty much you cannot really trade this because that was NFP day here, and then NFP came in, popped it higher, and then Friday just ended up retracing. So again, a pretty boring week. Honestly, I made a review for my community, and there were a couple of trades on EU and GU to be taken, but just one or two, right? Now what we're having right here is a weekly bearish imbalance that has been created. The monthly candle has closed with a very massive bearish candle, which is great. This monthly candle is opening, it's taking out the previous monthly low right now, and let's see, is it going to be another bearish candle on the DXY? Definitely it could. I will not really look to the left like at 2022 levels. I'm just going to be focusing right now on the most recent price action. Weekly bearish imbalance, that will be a great shorting opportunity here potentially if the market pulls back. So I see I have an alert right there, so I'm just going to move it at that weekly imbalance. It didn't move. And then I dropped to the daily time frame and asked the question, okay, can I go short? No, because I don't have any zone. The zone is above. Can I go long? Well, not on the daily because I also don't have any bullish zones. And yeah, I mean, after such a crazy move to the downside, we can start expecting a little bit of a consolidation until some sort of a news catalyst comes into the market. I see kind of things are starting to calm down, even if you're following some sort of news outlets. They don't have much to talk about. It's pretty funny, right? When nothing is happening, when Trump is doing nothing, when there are no updates, the market kind of tends to also go a little bit sluggish here. So then dropping onto the hourly time frame, we have, for example, here this very recent hourly bearish imbalance. To the left as well, we have this bullish one, but again, I would mainly focus on the most recent one that is currently signifying who's currently in control. However, I also see the overall market structure being bullish. So honestly, getting into Monday right now, it is pretty indecisive as usual. Okay, so Friday was a bank holiday, but even if it's not, it's pretty hard to be doing an outlook again after Friday closes, so doing it on the weekend. Not extremely productive, because again, you just don't know where the market's going to open and what it's going to do. Now, of course, I would like to see a little bit of bullishness to pull us back into that weekly imbalance. That to me will be the ideal outlook. So for example, tapping into that hourly, right, or maybe breaking it, printing a hourly bullish, and then taking us into that weekly bearish. So then we can short from a very good positioning of price. Okay. And then, of course, the other scenario will be, what if the market just wants to decide to go lower? It starts breaking structure to print bearish imbalances. Potentially, it creates, again, this market structure shift pattern where we have a high, a low, a lower high, and then a lower low wave gets created, and that confirms the bearish structure. And then from there, we can continue to short. Again, like, it's currently in this corrective pullback. I definitely do see the shorts. However, they're not still here yet. So again, guys, how should you flow? You wait for the market to open and you see who takes control. Is the market going to start failing that hourly bearish imbalance and print bullish ones? Buyers taking control. Where do they guide us? Towards the liquidity here, which is also the weekly imbalance. Okay. Our sellers going to pick up, breaking structure below with, of course, with an imbalance preferably. Sellers are taking control. We're looking to be targeting all the liquidity levels down there. Okay, so that's the plan on the DXY. We gotta wait. Monday is without news, so very likely it's gonna be a slow day, but again, we never know. So let's see how it goes. Let's check out Euro USD. Now, again, here, I really wanted to see the market pull back into that daily imbalance, but again, it just didn't play out how I wanted it to play out. It opened up again on Monday, you can see, and Monday chops, and then just towards kind of the end of New York session on Monday, we popped higher, we closed above this liquidity point here. And what did we do, guys? What do I always tell you? Again, wait for Monday to open, for it to show you where it wants to go. And then what did we have is we had a very clear closure above that liquidity high with an imbalance being created right there. And this is pretty much the trade of the week right there. I was away this week, but so many community members of mine took that long trade here for a very quick profit here, right? Because you just tapped in, it went beautiful. And then after this, if you study the hourly time frame, there wasn't a single imbalance being created, and this to me signifies lack of volume and lack of momentum. Okay, no imbalances here, nothing bearish here, nothing bullish here, nothing bearish here, nothing bullish here. So it's pretty chopped up right now. So if I delete everything right now and again go to give a little bit of an updated analysis after this extremely crazy monthly candle here. This candle is pretty sketchy because you can expect, like, after a massive candle, the market can consolidate, but here it was also massive, but it can continue. But it's usually continuing when there is available liquidity. Now, did this last candle take liquidity? Well, it did take that high here. So what will this monthly candle do? Will it continue to expand? Well, we don't know. For this, we have to also listen to the lower time frames. And what is very interesting again here is actually a pretty nice thing to have is a weekly bullish imbalance, because the last time we had such a thing was down there. Okay, and the market went higher from it. Right now we're having it again, which gives us some more confidence for the longs. Then we drop to the daily time frame, and again inside that weekly we're having, for example, this daily here, which is further confluence. We had this daily here that we tried to long from, but really the entry models were not presented properly. So it tapped in, it reacted, and right now it's actually breaking the reaction, signifying that this daily imbalance is kind of really no longer working out. So here the outlook is going to be the exact same as the DXY, because EU and the DXY are pretty much negatively correlated in the same way. Again, who is going to take control right now? I would absolutely love for the market to pull us back into the weekly. Okay, and then from the weekly start looking again for the buyers to start taking control, and then of course attack for new highs. That will be my favorite outcome. Okay, now of course the market can do so many other things, and nobody knows what the market's gonna do opening on Monday. Okay, so again we have to wait and see what it wants to do. If it starts popping higher, closing above this structural high with an imbalance, then of course we have clear liquidity objectives again above that high. This is kind of the ultimate target that we can be looking for. But if the market opens up the weekly candle and it first goes bearish, then this is going to be great positioning for us to be targeting and trading the weekly expansion towards the liquidity. So that will be my ideal scenario. So yeah, this is where I'm gonna leave it. Really nothing much to say. No zones on the daily to work with, no zones on the hourly to work with to say, okay, there is a bearishness, so I can be looking to follow that. No. So what we have to be looking for is we have to be looking for zones to be created. So again, let's wait and see. Well, here's GBP USD that played out exactly how I wanted, so it's always good to see this. All right, so the market opening here on a Monday and opening bearish, taking us into that daily imbalance and an absolutely beautiful long. Again, a lot of my community members took that one, made some nice profit, and then there was also an incredible short within this candle here, targeting this next imbalance and targeting this one as well. Beautiful short here on Wednesday from this 1 hour imbalance here. Absolutely beautiful. So there were actually 2 to 3 trades on GBP USD. I reviewed them all for my team yesterday. But yeah, so overall, pretty good development. We had the long here from the daily, beautiful, and then we had the short here, and then we had NFP that didn't do much. And right now, it's starting to get super interesting. So on the weekly time frame, we don't have a weekly bullish imbalance. Okay, now unlike EU and the DXY that do have it, this one does not. So makes it pretty interesting. Okay, so is GU also gonna go higher? Currently, we are in a pretty bullish overall structure, but if you start very slowly to read the overall momentum, okay, we had that daily imbalance that the market tapped in. It pushed up to take out the liquidity, okay? But did it close above the liquidity? No. Did it make an imbalance above the liquidity? No. So what does that mean? That it's a weak push. And what does that mean? It's going to attack the opposing side of the liquidity, which is why we took that trade on Wednesday, following that thought process. And then the market takes us into this zone. Okay, this is what I call reaction area. So those are old zones that are not retested where the market can react from. And at the same time, we're printing a daily bearish imbalance that the market formed on Friday. Extremely interesting, okay? Because it is tapping into a lot of support to the left, right? We have the sell to buy, we have the daily reaction area. We also have structure still on our side. We're again making, like, again, this could be like a major higher low, higher high, higher low potential right now. So it's gonna be extremely key to see what that daily bearish imbalance is going to do. This is going to be the determinant, guys, of what next week is going to do, okay? Because we are getting even a little bit more of bearish pressure. Like, I really like this short. Like, if this was a normal week, a normal day of the week, I would definitely be looking to short from here. Like, look at that beautiful flush, introducing a lot of momentum. Look at that beautiful corrective pullback without any bullish imbalances to stop price. So this is a what I call a no struggle area where the market is not really gonna struggle to attack the liquidity, and usually when it's like that, it expands like crazy. This also here towards that daily reaction area was also no struggle area, pretty much below this low here, right? And then the market expanded violently. Right now we're getting this followly bearish imbalance. So I mean, this is already looking like a beautiful, like if this was a live market here, I would absolutely be looking to start shorting right now. So let's see, pretty curious to see how this one is gonna play out, because the daily took control, and then from the daily we're getting the followly bears also taking control. If you're looking to trade this one early in the week, you definitely could. I would prefer potentially some more signs on the 1 hourly time frame. Like if the 1 hourly time frame starts trending lower, then you could potentially find an opportunity somewhere again within these areas, because that is going to be your kind of area to strike, okay, and attack all these liquidity points. Now the market can also open bullish to come and sweep, okay, and then of course what happens after the sweep? Are we going to break above and start showing bullishness? Okay, then we have to shift the bias. All right, are we gonna sweep it and then immediately flush lower? Then again, we attack the liquidity. So those are kind of my 3 potential scenarios that I see. I am really favoring the shorts though. Really favoring the shorts. I really do like how it looks like. So let's see. Okay, favoring the shorts. If we definitely start seeing the bearish pressure, I will be there to look to short. But if the market opens and fully invalidates everything, then of course I'm gonna be very quick to change my bias. If you watched the previous outlook, you'd remember that I was not interested in Aussie dollar and NZD dollar, because I even left a note here. But yeah, I mean, it opened up. So again, I had 2 outlooks, either to pull us back into the daily imbalance or to pretty much break out and really close above the liquidity. And it actually did that. It actually did break above, closed above with bodies, and it printed an imbalance. So this is pretty much a little long opportunity right here that you can take, attacking this very recent liquidity, because then the market failed to follow through with a new imbalance, and then it started attacking the opposing side of the liquidity, and then it just started chopping like crazy. Okay, so there was this one little trade here, that one little long, pulling us back into that, boom. But that is your trade of the week on Aussie dollar, but still pretty happy that it actually provided something. And then of course the usual behavior of these pairs. This is why I do not trade them, because they are offering you a negative edge, right? Why would you trade something that is absolutely choppy like this? You're pretty much tilting the odds not in your favor. Three extremely choppy days here. Friday showing a little bit bearishness, nothing on the weekly, just throwing wicks to the upside. Again, another week that threw a wick to the upside. Like, look at all these wicks here. Nothing on the daily, nothing on the weekly, and even nothing on the quality time frame. I mean, we have this little guy here, that little quality bearish imbalance. I really wouldn't touch a pair that looks like that. I can say, okay, sellers are currently in control. I do see that the market is maintaining, for example, here the lower high. So I definitely do see more sellers than buyers. We can be looking to attack that very recent liquidity. So if the market goes on and takes it, then I just don't know what happens afterwards. Is it gonna again close below it with an imbalance for us to continue going lower? Is it going to sweep it and then reverse for us to attack the opposing side of liquidity? I don't know, but again, I am not right. I'm not interested in Aussie dollar. Absolutely choppy pair on all the time frames. So I totally recommend you don't trade it, because you're literally making it hard for yourself to take high probability setups. NZUSD, literally the same. Again, we were looking for a pullback into the daily. That did not happen. Or a breakout retest and the continuation, which is what happened. We broke above the liquidity. We closed above it. We stayed above it with a probably bullish imbalance, and then it pinged up very nicely. It actually followed through with another one, but then that got invalidated. Then it pulls back lower high, and then it flushed. Here also not bad. Not a bad short here as well. So NZD dollar kind of offered two opportunities this week, because we're seeing that the market is failing to continue higher right here. It started to build a bearish order flow. We did have this market structure shift pattern, right? High, low, lower, high, lower, low. So this here is a proper short, shorting it again towards the low hanging fruit, this liquidity, and then the market ended up pulling back. Definitely not bad. You can go and explore how you could have taken these trades. Let's see, weekly time frame, again, a very big wick sweeping a very important liquidity point here. So that is a weekly liquidity, so important to know that. Daily time frame, no daily bullish, no daily bearish. We just have this daily kind of reaction area, but it doesn't really give us any value because the market is pretty far away from it. Quality time frame, again, similar to the Aussie dollar. I do see that currently we have sellers in control making bearish structure. However, no imbalances. So if I don't have imbalances, I don't trade. Okay, here again, the market picked up steam, broke structure with an imbalance. Great, I look to short. All right, but here on this next move down, did we make an imbalance? No. So then the market pulls back deep, and then right now it tries to make its way lower, but without imbalances again. So I mean, sure, this one is a good target. That one is going to be the next target. This is kind of the current range that we're trading into. We're exactly in the middle of it. I have no idea what's going to happen here. Are we going to explode lower towards the liquidity? Are we going to break higher and then start trending higher? I don't know, but also I'm not interested in it right now. Looking at the Aussie dollar with that, it has a follow bearish imbalance, but it's also a lot more flatter. Like you can see here, we're kind of trading in that consolidation. Meanwhile, NZD dollar, it kind of looks more like a downtrend. Okay, so I do see a little bit more bearishness on these two pairs, but I'm definitely not interested in those two. So let's see how they open. Maybe they offer an opportunity if you're watching them. This is why I really love GOAT, is because my favorite way of trading, I mean, this is how I believe the markets should be traded. This is how a profitable trader should trade, is by flowing and adapting, okay, and being quick to change their minds without mirroring biases. This is what I love about gold, all right? So I was at first more bearish on gold. We were seeing all of that bearish price action here, daily imbalances following through, liquidity target down there for us to attack. But guess what? Okay, guess what? The market, what I said is that I wanted to see the market to create a daily bearish imbalance on Monday to trade it on Tuesday. Did we make it? No, right? I mean, it is an extremely tiny one. This kind of imbalances I do not trade, okay? So immediately looking at the Monday candle gives me a lot of bullishness, okay? And then immediately looking at what is currently starting to form, we have a high, a higher low, and a higher high. So the market structure shift pattern started to occur. And then guess what? Who took control? Well, the buyers started taking control. Where do we target? This high. I was away this week, but had many community members capitalizing on 1 hourly zones and 15-minute zones towards that liquidity. We saw who gets in control, and then we, of course, attack the opposing side of the liquidity. Now, then after this, it kind of got a little bit tricky because this candle here was also traded on Wednesday, but this then created that daily bullish imbalance. and then we could have shorted into the daily imbalance. Why? Well, because the market took out the liquidity here on the top. So we had a higher, higher low, higher high. But as we were creating that higher high, did we get an imbalance? No. So there is nothing to push price higher, which means again that this overall push here, this kind of structural push, is weak. And then the market goes on to take the liquidity, but this was done during NFP, so you shouldn't have traded it overall. Okay, so currently what is really important is that daily bullish imbalance. So if I delete everything that is not relevant, maybe just again go back to check on the weekly. Pretty big indecision here on gold. Again, we're starting to get a little bit more, I mean, it's not really uncertainty in the market, but it's kind of, I would even say, complacency. I see money starting to return back in the stock market. It seems like people are slowly starting to get back their confidence, and they're starting to very slowly put back money into the US market, into the US stocks. And then gold is starting to distribute a little bit here after all the uncertainty. Right now, I think gold is a very sentiment-driven asset. When there is uncertainty, it tends to really go. But when the market kind of stabilizes a little bit, for example, we're starting to see the US stocks going crazy. I really do like to trade gold and also US futures, because they kind of tend to be not negatively correlated, but when one is moving, the other one is not. So right now we're seeing, for example, the US indices starting to really rocket higher, while gold, for example, right now it's starting to consolidate. Why? Well, because people are starting to very slowly exit gold and of course shift their money towards the US indices, for example, or US stocks. Still, we formed this daily bullish imbalance. Now that doesn't mean a lot right now, so in order for me to start taking longs, I really want to see a trend established. Okay, I want to see, for example, in this case, a higher high above this high, because that is definitely going to confirm to me the bearish trend. So exactly the same here, right? We were bullish, but in order for me to establish a bearish trend, I need a low, a lower high, and then a lower low. Daily imbalance, you take a short. Okay, very easy. So now I need a push higher, pull back, take the highs. Okay, so this is what I definitely need. But then of course, dropping onto the hourly time frame, we came into the daily bullish with a hourly bearish, and right now we tapped into that hourly bearish and we're reacting from it. So currently you can see we're stuck in that supply and demand sandwich. You can already get a little bit aggressive if you love scalping gold. You can already start forecasting before something has happened as well, because for example right now, if this hourly zone fails, then that would mean that the daily is holding, and then we're going to be attacking the liquidity. So for me in this case, if I have a body closure above this high, okay, I will be dropping to the lower time frames to be looking for long setups. So that will be my setup. But of course, if that hourly holds eventually, like you can even right now start observing it on the 1 hourly time frame, you can see the market tapped in. And right now, kind of on the 1 hour, some sellers came in, but then they tried to push, they failed. So it's really all about what is going to be happening again, guys, on Monday, because you cannot say right now, go long. We don't know. The market can gap down there. So let's see. I would favor a little bit more longs. However, I just want you to know that gold is currently in a little bit of an uncertain situation, right? It's starting to kind of flag a little bit here. So it's not trending. So you have to be very quick taking profits, and you always have to target very close liquidity points. So this is my outlook. I see a body close here. All right, body close above that high. I'll be looking to long towards that liquidity. That is my trade. If not, of course, if the market flushes lower again with some imbalances, then of course you again, what do you target? You target the most recent liquidity here. Okay, so if you start having a bearish imbalance here, what if I start seeing the 1 hourly time frame truly commit lower with 1 hourly bearish imbalances, then that time frame is going to guide me towards the next liquidity. That is going to be this daily zone. Okay, so this is my gold outlook. Again, I do prefer the longs, but even fundamentally to me right now, we need to have some sort of a catalyst to start for gold to start moving back again, or back down, or back up. So I'm patiently waiting for this one, but in the meantime, we're definitely getting some great scalping opportunities on gold, so we gotta show up every day. All right, let's have a look at the JPY. So USD JPY, so I had a couple of scenarios here. One was bullish. Yeah, quite a few scenarios. We had that hourly zone. The market could have tapped in reverse. Anyway, the market opened, and what did the first thing that it did is it made a hourly bearish imbalance. Okay, so this is my forecast. This is exactly the line that I made. The market broke down, hourly bearish imbalance, exactly what I want to see. Pull back into it, lower high, attacking the liquidity. Okay, and then after that, again, it showed the signs that it wants to follow through further by creating a new follow bearish imbalance. Now it didn't pull back into it, but that was a breakaway gap, so you do not expect for the market to pull back. And then it flushed once more, where to my next liquidity target. And then after that was taken, you don't keep chasing it because liquidity is already taken. The market shifts to the long side here, shows you first signs of a reversal, creates a low, a high, a higher low, and a higher high, and then again it pulls back here for a higher low. Unfortunately, this is not a trade for me because there was no imbalance to trade from, and then it rocketed on NFP and closed Friday with a little bit of a pullback. So not a bad development on USD/JPY. And the forecast, one of the forecasts, I mean, you can say, well, bro, you're giving us 3 outlooks and then of course one is gonna happen. Well, that's not the point, right? This is how the market should be traded. You think about different things, you are prepared for everything, and then whatever comes in, you act on it. It's so simple. Wow, if I say, hey, the market is going to pull back here and then short from here, you're just gonna keep longing towards that zone, or you're just gonna keep waiting and missing all the beautiful shorts. This is what I used to do in the past. A lot of times I would say, okay, I'm looking for the market to retest that level, and I would miss this short, I would miss this short, I would miss this short, on all the shorts, and then by the time the market pulls back into that level, the market is already long and reverses against me. Okay, all about reacting, guys. So let's check it out. Weekly time frame, massive wick, tells me nothing. Daily time frame, that was important here. We took out that liquidity point, and we had a daily bearish imbalance here that seems like it's failing right now. Thursday showed us a failure of that daily imbalance. Now that could mean we could be going for the next liquidity target, which is this very small daily imbalance. But are we really gonna get there right now? Could be. So there is where the market came into the daily. It reacted and then it absolutely smashed it. But then still, we are getting this sort of complex correction here. So if you look at structure, okay, if you look at structure, the market is again bullish right now. High, higher, low, higher, high, higher, low, higher, high. Right now, this could be a higher low. Okay, however, on the pullback, it is not very corrective. Sellers took control on the pullback, which means that the sellers are very strong here in that pullback. And although we're tapping into this guy right there, I no longer regard this as a valid zone because right now I see that the sellers are in control. So in order for me to take a long trade right there, I need to see these short zones fail. Okay, so this one reacts, breaks, next one reacts, breaks, then I target the liquidity. Okay, low hanging fruits. I don't want to say it's gonna go there, I just target what is in front of me. Okay, the other scenario will be that the market actually makes a lower low, because then what do we have? We have a high, a low. If this is a lower high, how do we know if it's a lower high? Well, of course, when the lower low forms, it's that is simple. Okay, don't forecast the lower low, wait for the lower low to form, then trade for a lower high, and then target the next low hanging fruit. Boom, absolutely easy, guys. Like, trading is that easy. However, it's extremely hard to do it in the live market, right? And of course, you have the aspect of timing as well. Sometimes that setup is going to happen in Asia, sometimes London, sometimes New York. So that's the tough part about it. So that is USD/JPY. I honestly have no preference for this one. I don't see like a lot of long massive bias. I also see that the short sellers here really got pretty much, they gave up after they took that liquidity. They immediately gave up, and then we started going higher. This to me doesn't look a lot like profit taking, because profit taking is usually pretty quick. This to me kind of even looks a little bit more like a reversal and an establishment of a trend. But let's see, right? So for example, here again, we massively flushed and then we started establishing the trend, right? Here, this one was crazy profit taking as well, but also with the reversal. So let's see. Again, don't make too many forecasts. Don't try too hard to guess what is going to happen. These are my two scenarios. This is how I would go long and this is how I would go short. So I just wait to see what's going to happen. Let's go over EJ and GJ very quickly. So here, what did we do? I mean, goddamn, this is extremely choppy. So I either had a breakout above or I had a liquidity taken and then a reversal. I mean, look at how things played out here, right? The market opened up, it tried to push down, it didn't take the liquidity. And then it pushed up, took the liquidity, and then it went down to take out the liquidity to the lows. And then it went up to take out the liquidity to the highs. Absolutely choppy market right there. You're constantly, okay, now I'm going to go short. Okay, now I have to go long. Now I'm going to go short. Now I have to go long. I really dislike these pairs. But anyway, we're having these weekly imbalances that the market is not pulling back into. We have one extremely tiny that I'm probably going to ignore, but it is there. Daily time frame, like look at the daily time frame here. Look at that stagnation of price. And sure, it popped up on Thursday NFP. Here we have Friday pulling us back again, creating a very small daily bullish imbalance again. The hourly time frame, they took control here, the sell side, and there's a very small hourly bullish as well. Goddamn, this market is extremely confusing. Like, it has all of these weekly zones below us. It has a daily bullish right now. It's tapping into hourly bearish, but at the same time printing a hourly bullish. So are we going to pull back into this daily to get a long from there? Are we going to break above that hourly reaction and take the liquidity? Or are we... Yeah. I mean, we can also pull back into that hourly zone and go long already. It's not very certain to me. Like, there's so many, you can see I'm overthinking right now because there's so many things happening, right? Sellers took control, tapped in, reacted, but at the same time, hourly is bullish right here, but at the same time, we have a daily below us. And if you try to trade a hourly bullish, but you have a daily below you, that is a low probability trade. Why? Because the market will always want to gravitate towards the higher time frame levels. So my favorite outcome will be this one, to pull us back into the daily and then rocket to the liquidity. Okay, but these are the other two situations that would happen, and here I'm very one-sided. I don't like it when I'm one-sided. Okay, I always want to have a scenario where the market like breaks below and starts going lower, but for now I'm gonna keep the long side of things. I also do like longs kind of a little bit more on USD/JPY. So let's see, this is my outlook, and again guys, if the market absolutely breaks below that daily imbalance and starts printing bearish price action, be quick to adapt, find the liquidity on the opposing side and go short. Well, we saw GBP/USD getting pretty volatile this week, and yeah, I mean, ooh, this one of my outlooks here played out very nicely. So again, you can see one outlook says we sweep the high, we reverse. One outlook says we break the high, we continue. And one outlook says the market opens. Sellers come in. Did they come in? Yes, we came in with a hourly bearish imbalance. Then what do we target? We target a daily imbalance here. Boom. There's your trade of the week. Okay. And then the market here gave another short, but that was on NFP. Then it absolutely flushed and it absolutely popped. No, that's not NFP. That was the Wednesday flush that we took on GU. And then this is NFP. Okay, so not bad. Not a bad development. However, right now it's probably going to be very tricky. Weekly time frame, taking the low, previous weekly low, rejecting it. Daily time frame, I mean, we're tapping into that very, very last daily zone. And then we printed an extremely crazy Thursday. We do have also here, this is an imbalance. It's kind of a tricky one because it formed with a gap, but it is an imbalance. So we're tapping into that daily, what I would call, it's not a reaction area because that is the more recent imbalance. This one is the reaction area. Okay. Now we're tapping into that one and we're reacting from it. Yeah, this one is confusing. And then from here, we're starting to get again. This reminds me a little bit more of USD/JPY because USD/JPY also had these hourly bearish imbalances. We had this massive push. Sorry, is this the introduction of momentum where we're gonna go higher? We don't know yet. The pullback is also very strong. I don't like seeing strong pullbacks like that create opposing imbalances because that can a lot of times signify not a reversal, but just sellers could definitely take control here and then start trading lower. So really, I want to see what's going to happen here. This is going to be the same analysis as USD/JPY. I want to see that volatile imbalance fail, tap into the other one, react, break, and then I could be targeting the liquidity. Okay, so that will be kind of the favorite scenario. Then of course the other one will be that we break down for a lower low with an imbalance, and then of course we target the low. So that's that. Honestly, it's pretty confusing. Like, we have a daily bullish and then we have a daily bearish, and then the flower right now takes bearishness, but we're still kind of part of that bullish push. It's like all over the place when you're getting very contradicted across the different time frames, and like you get different sorts of structures and imbalances. This just means one thing: it's a low probability market. The high probability market is always going to shout at you. It's gonna be one directional, okay, and you're literally not gonna have any confluences against, right? So, because right now I can say daily bearish imbalance, hourly bearish, I'm short. Okay, but I can also say daily bullish imbalance and also hourly bullish imbalance and also a break structure here, I'm longs. Okay, so do you see it's very 50-50? You don't see one side prevailing. Anyway, I'm spending too much time on GBP/JPY. This is the outlook. Overall, I'm looking to see what's gonna happen. Whoever is gonna take control, I'm gonna follow them. Well, congratulations, all-time highs on ES and NASDAQ. So we are finally there. There we go. Unfortunately, right now, probably US investors and even me, we are suffering a lot of depreciation of the US dollar. So this all-time high to me is not extremely important because I'm running into very deep losses for the depreciation of the dollar. All right. So if I'm like, for example, 20% profit on my position on Google, then I'm like 10% down on the dollar because it's a US holding and I'm buying them with euros, for example. So I'm pretty screwed right now just because of the dollar. However, all-time highs, all-time highs. That is important. Weekly time frame. Let's see. So wait a second. Is this candle already opened? Why is it showing like that? 7th of July. Yeah, that's strange. So this is the actual weekly imbalance that we created this week. So yeah, this week just opened and just boom, popped the all-time highs. Okay. We already started here from last week, trending higher, and then again this week it opened up, chopped on Tuesday. Wednesday was a good long setup, and then on Thursday NFP the market popped it higher, and then on Friday we are ending up with a little bit of a retracement. But wait a second, Friday is a bank holiday, so why does it show? Yeah, this is part of Friday's price action. Yeah, so kind of confusing. But now my question is, okay, do we actually have an imbalance? Yeah, we do have. So currently, guys, at all-time highs, it's always very 50-50. What you always have to wait for is you have to wait for a pullback, then for the all-time highs to become your liquidity target, and then travel towards it. I have backtested a lot of all-time highs. A lot of times the market can do, well, not a lot of times. I mean, it can do two things, all right? It can continue expanding way above the all-time highs, because if usually people can start getting FOMO and they're like, okay, it's time to buy, and then all of them start buying, and then this creates an imbalance to the upside. Or investors kind of, okay, start taking profits, and then the market ends up sweeping the all-time highs, creating a deeper pullback. I don't know which one is going to get formed right now, but I would definitely love to see the market pull back into that weekly, or at least into this daily, which is already getting close to it. And you can see on Friday, actually, a lot of sellers came in. So this to me here, again, looks like a very massive profit taking. The market massively rallied on Thursday, and then Friday, very nice profit taking. Here you can see how the market really went down with a lot of steam. Already tapping into that latest forward imbalance and already giving us a little bit of a bearish pressure. I would say I'm definitely looking for that daily imbalance to tap in. And then from there, again, we have to see, is the market going to hold? Is it going to start reversing higher? Or are we going to right now start creating bearish price action? Because if we do, then that could guide us into the weekly, all the way down there. So again, let us see what it wants to do. I am just wondering right now if we have here a weekly bullish imbalance, or is this, yeah, this is the, if I delete this, it's so confusing. I just deleted it and we're still at the same price action. So yeah, I guess this is the actual weekly imbalance here. So let's see. I do see a lot of that profit taking. Now that does not mean, okay, let's go short immediately. No. But if that order flow continues, if we once again, for example, create that lower high, break structure below, you can take a short. But then as soon as we get into the daily, then that is going to be a place for buyers to start stacking back up. You can see here we have that accumulation before the pop. So that probably is going to be an area of volume right there. So I will be looking for longs overall as we pull back. And then as the market starts trending higher once again, we're going to be targeting all-time highs. So very interesting times ahead of us with all-time highs being reached, while the market is kind of a little bit still, it kind of feels a little bit uncertain still. It kind of feels a little bit slow because again, Trump is not giving us any news right now. It's still, things are still ongoing. There is still, again, not a lot of certainty, but really that is hitting the dollar a lot. We can see US stocks are actually climbing, so we keep trading them. Well, Nasdaq is going to be the pretty same outlook here. We're taking the all-time high, so you can always mark that up. We are having below us a beautiful weekly imbalance, so this is definitely going to be a favorite point of mine, where if the market pulls back in here, we can definitely be looking for longs. Dropping onto the daily time frame now, again, this candle close right there. Is this Friday's candle? Probably is, yeah, because we're having that daily bullish imbalance here. And then dropping onto the hourly time frame, very similar to ES, we're getting that very recent sell-off. That is probably some profit taking after that massive rally higher. Okay, so again, the two things right now, this daily zone can offer price a lot of support. So if we actually pull back into it, which I think we will because we're very close, Then if the market starts picking up, we can look for the longs. But then if the market breaks that one and starts going bearish, then we can look for the shorts towards the weekly imbalance, which is then going to give us a very good positioning of price. Okay, so that we can, so that's going to be the sell side. So then we can have a very nice buy side towards the all-time highs. Okay, because all-time highs right now are taken. They actually got taken here. The market pulled back and then rallied above them. Okay, so let's see. It looks like again we are getting more comfortable above the all-time highs, because if that was going to turn into a massive sweep, the market should have swept from here and like really started to retrace a lot, but it actually just pulled back for a higher low and made a new higher high. Okay, so I'm definitely very confident on the long setups. So let's see how the weekly is gonna open, and then of course we show up every single day at New York Stock Exchange and we trade it. So what is interesting is that YM has a lot of space still to be traveling towards the all-time highs. So let's see if it's gonna do that. We're having again the similar weekly imbalance here, and then we drop to the daily time frame. We also have a daily bullish imbalance here that the market can pull back into. Here we have a voyage. So yeah, I'm looking for the outlook is very simple here, guys. I'm looking for some sort of a deeper pullback into a daily or a weekly zone, and then from there we're looking for the market to shift back up again to potentially start longing it. Now again, there were some good longs right there. Pullback higher low on Wednesday. Longs again taking the liquidity. Right now you can still keep looking for longs, but this hourly bearish imbalance is worrying me. Okay, so if that hourly bearish imbalance fails, you can definitely go for the highs. But if that hourly bearish imbalance holds, then you can go to the daily, and then from there potentially look for the shift in terms of a long setup. Now of course we have the weekly below us, but this is making a little bit too much of a forecast to say that the weekly is gonna tap. We don't know. Okay, so those are kind of the two outlooks. I'm definitely preferring longs. However, any sort of a bearish pullback that we have right now on the indices will give us a great positioning to potentially strike again for the longs. Having a quick look at DAX. Now what I was waiting for here is either we go long from that quality time frame, or we go long from the daily that has to be created on Tuesday. So let's see if that actually happened, because I'm not trading DAX and I don't check it. Yes, we did actually have a daily imbalance to be created, and we tapped it on Tuesday, but we came in extremely aggressively, and then we had 2 days of a little reaction, but not really following through nicely. Yeah, it tapped in here. It came in with extreme bearishness, which is always a bad sign. Volatile bearish, and then again, if you try to short from here, you actually win, but then you're still looking to long from that daily, so that is a very 50-50 situation. But then the market came in to sweep the liquidity, it didn't follow through, and then we attacked the opposing side of the liquidity, and then we stopped making imbalances. Nothing bullish here to go long from, and then here we reversed lower. Currently sellers are a little bit in control. I mean, DAX already was at all-time high. No, sorry. Yeah. I mean, DAX already reached all-time highs way before the US indices. It already made a pullback. And right now, it's kind of a little bit 50-50 here. It's starting to travel towards new all-time highs, but it's not ready yet. So again, we can see the very recent price action here. It is giving us a lot of bearishness on the forward time frame. So if that bearishness persists, this is going to be liquidity, and then this is going to be liquidity, and then what happens afterwards is outside of our control. But again, very similar to the US indices, if we actually start breaking higher, and if we invalidate these bearish imbalances, then that is going to open the bullish side, and then you can of course target the liquidity levels that are above you. So that's it. Okay, we either hold from here and we attack the liquidity to the downside, or we either invalidate the hourly bearish imbalances and we attack the liquidity to the upside. Well, to wrap it up, let's go through all the pairs. Now, the DXY, I am getting pretty much a mixed bias here. We're seeing that bullishness starting to kick in, but at the same time, we introduced some bearishness at the end of the week. I'm really looking to see where the market is going to pick up on Monday. That is literally the plan. Monday is without news, so we're very likely gonna maybe make a fake move, or maybe we're gonna introduce some volume towards where the market wants to guide us. But I either want to see a violation of that forward imbalance to drive me towards the weekly, or a break of structure of that low to create a lower low to confirm that the bears are taking control. Euro USD here, a very choppy end of the week. So again, I will be listening to the DXY to see what it tells me. Are we going to pull back to the weekly for a long, or are we just going to break above for a long? I'm pretty one-sided here, but again, I'm just bearish bias on the dollar, and of course bullish on EU until the narrative changes. GBP USD is giving a very nice short bias here, very nice daily bearish imbalance, hourly bearish imbalance here. If the market starts picking up steam to the downside, you can definitely be looking for a quick scalp towards the liquidity point, but the market can also pull back to liquidate the high and then give a short, and it can also invalidate the daily imbalance. So always watch out, wait for clues, wait for the market to show you what it wants to do. But a more bearish sentiment on GU, which might mean that EU could potentially go lower a little bit. We're gonna see. Aussie dollar, I'm not interested. It's showing some little bearishness here, but definitely not interested. NZD as well, no imbalances here to trade from, not interested. Gold, I am looking for more longs. However, I will need to see a body close above that high. That is going to confirm the invalidation of that forward imbalance, and then this can take us into the liquidity. And if that forward imbalance holds and the market starts guiding lower, I will be looking to be taking this liquidity. So I do like that daily imbalance that was created. That gives me some long sentiment. I do like the breakout structure, but I really want to confirm it first. USD JPY also giving us a little bit of a long sentiment here this week, towards the middle of this week and after NFP. But Friday ended up selling off a lot with forward bearish imbalances. So in order for me to long this market, I need to see these forward imbalances violated, okay, invalidated, so then I can target the liquidity. Euro JPY, it's pretty mixed up. It has forward bearish, forward bullish, and then a daily bullish below us. So which one is going to get tapped or what the market is going to do, we have to wait and see. And GJ is also a little bit mixed up. It has a daily bearish, a daily bullish. Forwardies are right now bearish in control, but structure looks bullish. Very 50-50. I'm going to be waiting. And indices, they just reached all-time highs, especially ES and NQ. Right now, we're getting some profit taking with a lot of bearishness here on the forward time frame on a Friday. It was also a bank holiday, but the market just kept selling off during Asia and London. Probably some profit taking here. So I'm looking for pullbacks. The first pullback is going to be into that daily to see if we're going to get the control. And then the second pullback is going to be into that very big weekly zone where it's going to be a beautiful longing opportunity. But I'm scalping the indices, so I'm not really looking for these big moves. I'm just looking to have a clear bias. And then, of course, I'm scalping them after New York Stock Exchange open. Similar with NASDAQ again, pulling back into the daily, taking control, or failing the daily and going into the weekly. That's it. YM as well, daily bullish imbalance. Let's see if we're going to pick up steam from there. And DAX is going to need a little bit more time because it's kind of really mixed up this week. It didn't give us much this week. It's kind of a bearish candle. Daily bullish imbalance, it's not entirely failing, but then we have these bearish imbalances here. Very mixed up. I would like to see a little bit more of a trend. So this is the outlook for this week. I'm going to be focusing on the majors, of course. I'm definitely going to be focusing on gold because it's looking pretty good. USD JPY might also provide a setup. I do find this pair tends to provide. EJ and GJ definitely not. And of course, I'm going to be focusing on the indices to be looking at what they're going to be providing. So let me know how you guys perform this week. Let me know your reflections. Let me know the trades that you took. And let me know also what is your favorite setup for the upcoming week. So that's for me. I'm going to talk to you on the next outlook. Good luck this week.